Hey guys, welcome to the Ready Set Trade of the day for Monday, the 16th of November. I like Snapchat for the trade of the day. Earlier in November, we set up Snapchat as a trade of the day based on cash secured puts for December at the $30 level. We sold these at 54 and now they are worth less than 19 cents. So you could buy that back for a nice profit if you wanted to release that cash. Now I'm looking for a more directional setup. So if the price breaks above last Thursday's high, say at about 42, I would go in for the long. If the price pulls back, so if it breaks out and pulls back below 37, that would be the stop loss. Let's do some quick math here. If you have a $1,000 account, you want to keep all of your losses to less than or equal to 2%. In this case, that would be $20. You want to keep your losses to $20 or less if you have a $1,000 account. So if we're going to use this entry at 42, and if we have our stop loss here set at 37, that's a $5 delta. And so we're going to divide that $20 of risk by $5, and that's going to give us 4 shares. So we can trade 4 shares of Snapchat, and if the price doesn't do what we want and pulls down to 37, we're going to keep our risk to $20, period. Now, if we want to leverage the gains of 100 shares of stock, but if we don't have the account size to be able to trade 100 shares of stock, we can use options. If the price broke above 42, we could do what's called a vertical debit spread. We're going to be buying a vertical. We're going to be buying that 42 call and simultaneously financing the trade by selling the 43 call on a breakout above 42. And we want to keep the price of this to 50 cents or less, or $50 per contract. That represents your total risk. And that means if we're going to be risking $50 on the trade and keeping this to a 2% loss, as we did the previous one, that means that you have to have at least a $2,500 account to be able to play one contract of this trade. That is today's trade of the day. We'll see you tomorrow.